we are a fractional reserve system. If all of a sudden everyone can create stable coins, in some sense, the Fed and the government lose control of the economy. The new investors, they like to see the high volatility. They are looking at AI stocks, robotic stocks. They're looking at commodities that recently have gone crazy. And they're competing with prediction markets. If you are an individual investor and you're willing to do the homework and you can stomach the volatility, this is an unbelievable time to be an investor.
I'm very pleased to welcome to the program John Wu, president at Ava Labs. Avalanche, the Avalanche network, is a layer 1 blockchain used for building a lot of decentralized apps. The native token AVAX is one of the largest cryptos by market cap in the top 20 to 30, depending on the day. So I'm very pleased to welcome John to the show. He's going to be talking to us about the future of tech and the future of crypto. Welcome back to the show. Well, welcome to the show. I keep saying that because it feels like we've talked before, and we have. I've known you for a long time.
We have many times, but first time on the show, and it's
Absolutely.
Great to see you.
John,
you're very thoughtful in this great success.
Thank you very much. I appreciate it. You've served on the investment side before the crypto side. So let's just talk about the crypto landscape right now from an investor standpoint. This correction, this bear market, whatever you want to call it, Bitcoin having now corrected from $120,000 to $67,000, so 40-50%. We have firms like Strategy, Michael Saylor's Strategy, down a lot more than 50% over the course of 2025. It feels like a lull. It feels like a bear market. So as somebody who spent years working on Wall Street on the investment side, does this feel like a healthy correction to you, or is this the beginning of something worse for the crypto market? I think that's what a lot of investors are trying to figure out right now. How would you go about trying to figure that out yourself?
Well, like all emerging trends, they go through stages. And generally speaking, I think crypto is still relatively early, but it is going through one paradigm shift to another. And what I mean by that is we've seen a lot happen now in terms of regulation, and there is definitely a lot of adoption in many forms. But what's happening now is there's a shift from the old guard to what I would call the new guard. And it's not just at the investor level. It's also the type of developer. I see it in the people we're trying to hire at Ava Labs. It's also on the user level. Different types of users are trying to experiment in this space, more institutional in many respects. The way I think about it is blockchain, when I first got in, was pretty much personified as crypto assets. Today, it's becoming more and more enterprise technology. You have New York Stock Exchange looking to build on blockchains. NASDAQ's already doing that. We partner with places like Apollo, gigantic asset management firms who are deploying tokenized versions of their private credit fund and other things. Obviously, we know BlackRock and BitO, which is also an Avalanche. So the user, the developer, is also changing, not just the investor. From the investor perspective, it's very interesting. I'm not going to rehash a lot of things, but we all know, just take Bitcoin as an example. We've seen a lot of what they call the OG have moved their coins in the last 6 months or so. And the incremental buyer of those have frankly been ETFs, some in part the DATs. It's really a new guard, a new type of person looking to get involved in the space from the investor side. There's two reasons for this. A lot of the OG guys, they were in this for what the space was about. It was a cultural, it's a community. It's not coincidental that Bitcoin actually took off and was a success after 2008 great financial crisis, because people had mistrust in institutions. Now, if that's what this symbolized for you and was part of the community that you felt proud of to be in, and all of a sudden the institutions themselves now are adopting the technology, even if you still love it, it's just not that sexy for you anymore if you're that old guard. So that's a natural rotation. I liken it to, when I was a young kid, listening to grunge music out of Seattle. But then when Pearl Jam became popular, a lot of my friends who were grunge, enthusiasts suddenly decided they no longer like grunge just because it was getting popular. That's the same thing somewhat is happening in crypto from the investor side, because the adoption is happening. Now, the new adopters of this, the new investors, just talk about those, not necessarily even the new developers or the new users of it. They are not as, call it, religious as the OG people were. they have so many choices. They like the thrill. They like to see the high volatility. They are looking at AI stocks, robotic stocks. They're looking at commodities that recently have gone crazy. And they're competing with prediction markets. So the new investor, which is taking up some of the, call it supply from the old G, has a lot of choices. So there's fracturing of that demand as well. So that's what's happening in the space. But in general, there's no doubt you can look at the numbers for stablecoins, real world assets being tokenized. The adoption is absolutely happening.
So just following up my previous question about whether or not this is a bear market, I think investors want to know if this is still a good time to be in crypto, or is it, as some people would say, dead? There's so many other spaces to look into in tech, which we'll talk about in just a bit. But right now, it looks like sentiment is rather lethargic. Institutional investors are leaving the space. I'll mention that later. Why should someone look at crypto right now with Bitcoin at $67,000?
I think this is actually a great time for the discerning investor in crypto or in other parts of technology. There is massive tectonic shifts in different parts of technology. And what you're seeing is individual stock volatility and individual asset volatility, call it in crypto, happening now. Sure, they may all go down, they may go up, but they're going up and down completely different, wide bands of how that's happening. If you are an individual investor and you're willing to do the homework, especially in crypto, and figure out whether it's Avalanche or other coin that's actually doing something that's furthering adoption and furthering utility, then, and you can stomach the volatility, this is an unbelievable time to be an investor. I think this is when the individual who does homework and has conviction will really shine, not just in crypto, but also in tech as a whole. You've seen it with AI. It used to be 3 years ago, just buy anything named AI or related to AI. But now we've seen it gone from chips to basically the network players, to basically data centers, to all of a sudden to now memory and to other parts of it, to opticals. It's just a great time to be an investor who actually does their homework.
Help us make sense of this article then. So according to a few sources here, there's been some outflows in Bitcoin ETFs in the month of February. So after 4 straight days of heavy outflows that wiped out more than $1.5 billion, US spot Bitcoin ETFs finally saw a rebound on the 2nd of February. But prior to that, less than a day later, on February 3rd, the trend reversed itself again. Bitcoin ETFs recorded $272 million in net outflows. Institutions were quick to pull back after the prices failed to move higher. The outflows were led by Fidelity Investments, also ARK Invest, and $90.4 million from Grayscale. It looks like some big institutional players are a little bit shaken just by looking at the data. Can you help us make sense of this? Why do you think they're making these kinds of trades, shall we say?
Yeah, absolutely. So, I mean, this is a very specific and short time period.
Yeah.
I'm talking about in the last, you call it 6 months to a year.
Sure.
I mean, obviously, the last 6 months to a year, there's been massive net inflow into the ETFs. I think in Bitcoin alone, there's still well over $1 billion of total inflow, despite all this recent exit. And, the ETF investor, a lot of them are really retail. And if your average cost is above, call it, or closer to 100,000, you're not going to take the pain well, and you're probably going to get out. So yes, this is like an ebb and a wave that's underneath the greater trend that I was talking about earlier.
The global financial system is rapidly moving on-chain, and today's sponsor, Cool Wallet, is a name worth watching. Cool Wallet builds next-generation cold wallets designed for a world where real-world assets, payments, and savings live on the blockchain. Their flagship credit card-sized hardware wallets combine CCEAL6+ secure element protection, mobile-first usability, and a unique 2+1 factor authentication system that requires your phone, your biometric ID, and your card to approve every single transaction. So here's a Cool Wallet Go card. It's an easy-to-use, on-the-go, card-sized hard drive that stores your private keys and literally fits inside your wallet or purse. Activating the card is simple. It takes about 30 seconds. All you have to do is download the Cool Wallet app and follow the on-screen prompts. Let me show you now. Activating a new wallet is very simple. Simply go on the app, click on add wallet, and it's going to ask me if I have a card. Yes, I have a card. Every time you order a Cool Wallet Go product and package, it comes with 2 cards, primary and backup. It's going to ask me which card type, in this case, Cool Wallet Go. Notice how it pairs with NFC. Click on that, create a new wallet, activate primary card. Either of these cards can be your primary card. Simply scan the card by tapping it to the back of your phone. Success. And it's important to know that you need the primary and backup cards to be able to fully activate the entire wallet. So both of them have to be active. Now create a new pairing password. This is important for when you need to recover your wallet in case your cards are ever lost. Generate by card. It's going to ask me to generate a private key. Tap my primary card, start setup. Now it's pairing my private key to the primary card. Now that both cards are paired with the private keys and activated, the wallet is ready to go. As you can see, it's a brand new wallet, so it has no funds in there. Every time you put money in there and you want to transfer funds to another wallet like this, for example, it will require you to scan and tap the card to the back of your phone as a security precaution. That's just one of the benefits of using Cool Wallet. It's very secure. Remember how I said to remember your pairing password? Well, if ever you lose the card, go to settings, go down, replace primary card, and it's going to ask you to enter your pairing password. That will start the process. So once you've activated the wallet, you can use the app to swap to other tokens and cryptos. All you have to do is first click on the manage icon on the app, add the crypto that you want, then go to the home page and click on swap, and the crypto you just added should be there. You can also send cryptos to another wallet, making peer-to-peer transactions instantaneous and frictionless. There's also an earn function that allows you to stake your holdings to generate yield. Cool Wallet also recently launched a breakthrough fiat on-ramp feature. So instead of going to a centralized exchange first, you can on-ramp directly to Cool Wallet. Users can create a bank account under their name and a fiat currency of their choosing that's available, wire the funds in, and have those dollars automatically converted into a stablecoin that's on-chain, directly into your wallet within minutes. With support for 40 plus mainnets, staking, lending, NFTs, and advanced clear signing protections against phishing and malicious contracts, Cool Wallet is positioning self-custody for mass adoption. To learn more, go to the link down below or scan the QR code here. And if you do use my code, you'll get a 5% off on your first purchase. I'd also encourage you to check out my interview with Cool Wallet CEO Michael O for more details on the product and why we need self-custody today. And he also explains in great detail how the security functions work. Link also down below.
Which comes first now? Given how much of Bitcoin is owned by institutional investors, which comes first? Bitcoin going down or up for that matter, or institutional selling that's driving the price down? In other words, has the accumulation of Bitcoin by institutional investors become so large that when they sell, they actually move the market? Or is it still the other way around, you think?
I think it's getting to more like 50-50. It's not, I can't say the scale is tipped one way or the other. In the past, obviously, the crypto native was the one that tipped the scales far more. Over time with institutional, call it, because or retail within the institutional construct coming into this made it more balanced. It's not clear to me yet that it's so overweight institutional. I know everyone likes to say that, but reality is like RIAs are just starting to recommend the crypto ETF to their investors. And that takes 3 to 6 months. And they just started it recently. The wirehouses like Morgan Stanley, I think last month said they're going to start allowing their wealth advisors to do it. And that takes 6 months to 9 months. So from an institutional perspective for this space, I think over time, the scale will tip towards them. But right now, it's still pretty balanced, I would say. It's not overly OG and it's not overly institution. So you're going to have ebb and flow.
Okay, let's just take a look at some macro data. So today, just today, payroll numbers came out, rose by 130,000 jobs, more than expected. Unemployment went down to 4.3%. So a very strong jobs report. Stock market a little changed, however. Bitcoin's down 2%. I wonder why at least risk assets are not interpreting this as great news. Is it because now the Fed has less of an incentive to cut rates and we might see less liquidity. John, what's your forecast here?
I can see on the short-term data having, the employment, rate coming down to 4.3 means that, and Warsh being the next, Fed governor, chair,
yes.
Will have less of an incentive. And I think if you look at the curve, the Fed funds futures is, people only anticipate 2 more cuts this year in the back half of the year. And this, short term, justifies that, I guess. My personal view, though, is that you will see more. I would take the over in terms of number of rate cuts between now and the end of the year. I would not just look at one data point. If you look at one data point, I think you're going to miss the greater picture.
The greater picture, I think, may be a rotation of interest away from crypto into other tech areas. Correct me if I'm wrong, but that's maybe how I would interpret the sentiment.
I talked about that earlier, for sure. There's massive rotation into other, not just, we always talk about the attention economy. You got to find, the person's attention. There's like a attention economy related to investing or speculating or money, prediction markets, betting, sports things, as well as like AI, as well as robotics, all these types of stocks. So some of them are justified in terms of valuation. Others are not. It's what I call vibe investing, it seems like.
So how does crypto, and I'm grouping Bitcoin in with other altcoins and blockchain tech, how does the industry of crypto stay competitive in an environment where retail and to some extent institutional investors are trading or chasing the tech AI trend and the momentum behind AI and robotics and all the other things?
That's a great question. I mean, I like in my experience when I was investing in the first wave, I would call it, the computing. So I've seen many waves in technology investing. And I think people who know me know that I try to identify trends early. The first was in the 90s and the early 2000s. I call that the computing and the internet age. What we saw there was players like Amazon, Google, Netflix. They would disrupt the yellow pages, newspapers, and books, Borders, and call it Barnes and Noble. And then there was a second wave that was basically the app super wave in the 2010s and SaaS and mobile. So in terms of when does it go back, think about go back to the first wave, the internet search era. There were literally 15 different internet search companies, including an Ask Jeeves that realized search wasn't good enough so that humans actually answer questions when people typed into the search box. Then you had a rationing out, and then you had effectively Google, and maybe you can call number 2 Bing, and Yahoo stayed around, and 2 or 3 stayed around to be relevant. So what you're seeing in crypto right now is there are 10,000-ish coins on the centralized traded exchanges between Binance and Coinbase and Kraken and other places. You're getting rationalization, and you are going to get ones that are super exciting that are going to outperform. So it's going to literally be to the advantage of the person who does their homework and figures out which ones are attractive as a, call it, investment if they do their homework. And that's what happened with the internet age. You would realize 15 of these were not going to ever be around. And if you were able to find the right ones like a Google, you would huge winners in the space.
Are we seeing a moment when stablecoins are becoming a mainstream banking infrastructure? And I bring this up because just now I'm seeing news that Fidelity is launching its own stablecoin, digital dollar stablecoin, just this past week. Tether launched USAT with Bo Bynes, the CEO, on January 27th. There's a lot of new developments in the space. Tell us about the future of stablecoins, John.
Yeah, stablecoins definitely is product market fit, and that's a product of the crypto ecosystem, and it's come out of that. It definitely is. Just look at the volumes. I mean, I would say 18 months ago, you had less than, a trillion of volume going around primarily, maybe 2 years ago, primarily doing on-chain settlement. Now, by some estimates, there's $10 trillion of stablecoins moving around. A lot of that is actually the incremental has come from actually cross-border stuff. I was just talking to someone who runs a I don't want to name any specific companies or names, but runs a big wallet. And they also facilitate a lot of movement of stable coins. And their customers, their partners now are the MoneyGrams, are the Western Unions, and a lot of these basically companies that are known for doing cross-border stuff. If you look at just the payment section of stables, that it's growing really, really fast. Not as big as the on-chain settlement for trading, but it is growing really, really quick. And it's definitely product market fit. JP Morgan coin is going to have it for settling internal or your own network stuff. It's going to be a very interesting time. I think the Stablecoin Genius Act really unleashed a lot of adoption from traditional enterprises. We saw that at Ava Labs Avalanche in the form of loyalty programs and other partners that we work with, because suddenly they were comfortable using a stable coin to affect transactions and trades inside of their ecosystem. I think you still need the clarity for the market structure to make it even more adoption oriented, but that's on the come.
Stablecoin issuers want to offer yield on their stablecoins, and this has become the central fight over the Clarity Act. And I'll just read you a paragraph here. The fight over whether stablecoins should be able to offer rewards, a lobbying battle between Wall Street bankers and crypto insiders, is one of the chief headwinds keeping the Senate Banking Committee from advancing the Digital Asset Market Clarity Act. Now, where do you stand on this debate, John? On the one hand, we want all the positive attributes of banking with an online, frictionless, blockchain-based piece of infrastructure known as a stablecoin, but we also want interest paid on our savings, right? So I can see why the consumer may want one thing, but banks may not like their product being challenged. Let's just talk about what you think here.
Okay, so this obviously is the big thing right now, especially for the Clarity Act. In fact, I just had a breakfast with Brian Stile, congressman who on the House side chaired the Stable Act that helped ultimately become part of the Genius Act for stablecoins. Listen, I think where I stand and where a lot of people, even, if you become just down the fairway fair, is you just have to have clear rules for banks as well as for Coinbase and for others. There is a great argument on both sides for why they should be who the system should be the way they want to. We are a fractional reserve system. If all of a sudden everyone can create stable coins, in some sense, the Fed and the government lose control of the economy. From a individual perspective, a person in blockchain and crypto, I want to see people able to get stablecoin yield, because why, that should be, if they can get yield by putting it into the bank, but they should be able to get yield in stablecoins as well. So there's good points on both sides. I think what's going to happen ultimately, based on my conversation around it was a small clubby round table dinner, breakfast actually with the congressman, is that there will be some sort of compromise, but getting there is going to be messy. And I think this is as messy as it gets before both sides come back to the table.
Well, you've worked with Wall Street insiders before. Tell us, why can't Wall Street, the JP Morgans of the world, just issue their own stablecoin equivalent and offer yield on that, and then everybody will be happy? What's stopping banks?
They are doing the JP Morgan coin settlement purposes for internal or their own private network of transactions. So that is already happening in some sense. But to create something like this, it's a real challenge to things that they've done for hundreds of years. And it should be really thought through thoroughly, because the first order effects seem like it should be or it should not be so easily. But no one really thinks through the second order and third order effects. And you don't want these unintended consequences. So I think when you are the incumbent by nature, you don't want to disrupt yourself. So I think part of that is that. But also, in fairness, I think one of the things they're lobbying for is to really think through this and what kind of second order and third order effects that can happen, because there will be, and then you're going to have issues that people don't realize.
So just maybe help us speculate on what the future may look like. Maybe in 10, 15 years, if we can put on our futurist hats here now, John, what will the future of banking look like for the average American?
Well, we're already moving towards that. For the average American, it's basically the neobank. We started this basically, or neobank started in the 90s .com boom. I remember NetBank was the name of one, and it traded like crazy before it got crushed. I think you are going to be able to have a choice. There will be two types of, call it banking. White glove service, where there's more hand holding and certain services that you pay a fee for. And then there will be more do it yourself. And guess what? The do it yourself is going to be very automated, probably less secure, and but more convenient because you don't have to wait for certain things. So, like, perfect example would be like if you think about credit cards right now. I actually like my Amex, even though that's a high fee for the merchants. And the reason is because they have this incredible loyalty program. They also have basically, they're proactive. When someone steals your things or whatever, they come and say, hey, are you in this city? And if it's something that has been done, they have insurance and you're not responsible for it. On the crypto side, I love the fact that I can self-custody things and do things and move stable coins. And, Ava Labs is partnered with Ring, the fastest, growing on-ramps for crypto credit, and I like that product as well for smaller things. So I have both. I like both sides, but I can see how certain people want one or the other. So 10 years from now, from banking perspective, it's the same thing like every other part of business I've seen. You're going to have high-end service that can only be provided with fees and that look more traditional, but you're going to have more DIY, which is more self-custody, self-ownership, self-moving around, and peer-to-peer.
Well, you obviously saw a future in blockchain, otherwise you wouldn't have transitioned to the space. Just tell us what this future is that appealed to you the most, that enticed your transition from Wall Street into blockchain.
Okay, so it started with, frankly, in just Bitcoin. And first, I didn't get Bitcoin at all. I was trying to I was a tech investor, so everything to me was how big is the TAM? How do I do a DCF? Et cetera, and try to quantify the value of a company. And I couldn't do that. And for a couple of years, I went to these meetups in the early 2010s. I was like, wow, these guys are just crazy. So I definitely even pushed further away from it. It was not until, call it 2014 and 15 that I realigned my view and perspective on the space and realized, wait, think of it as more of a commodity like Bitcoin. It's a finite amount of commodity that's going to be unearthed, if you will, and you can do the math as to how many blocks, how many coins, Bitcoins will come out a year, multiply the price. You knew what the incremental supply was. And then we had my team basically counting addresses and making assumption how many dollars per address. And the thing that was clear to me back then was like the adoption was incredible and the incremental demand was 10x that of the incremental supply coming out. And if you think of it that way, this thing was obviously going to go higher. Now, I didn't get my aha moment in terms of use case and adoption and utility until the ICO boom with Ethereum, when you can actually program on a blockchain. When I saw how fast you can do an ICO and crowdfund globally, having been a tech investor and sat on the side of the IPOs and roadshows, I was fascinated by that. And that's when I really got into it from an adoption and use case and utility perspective.
Well, let's just take something like AVAX. If you were to look at Avalanche from an investor's perspective, not as a founder or president perspective, what would it be for you? Would it be a tech play or a monetary debasement play, which is what some Bitcoin speculators or investors think Bitcoin is?
Ava Labs, Avalanche has always been a technology company. From day one, you go back, to the first time we talked in, many of our meetings, we've always wanted to do two things. One was to create both in the, call it sandbox of crypto native, DeFi, et cetera, but create real utility, real use case. We were the first institutional chain working with, in 2022, before even FTX, we helped KKR tokenize their healthcare growth fund. We've always been trying to create technology, utility, and adoption from day one. So I think going forward, you want to, as an investor in this space, if you want to, I'm not giving out any advice. I have to put the disclaimer out there. I'm no longer a hedge fund manager or a VC, but I'm saying what you should look at is look at chains, look at tokens that are actually doing something that are creating real use cases, unless it's Bitcoin, which is I would still consider a store of value. use case. So look at the ones that have that ability to transition from crypto asset into enterprise technology. And there's no doubt Ava Labs is one of those.
So linking it back to our earlier conversation about how crypto should stay competitive, how are you making Avalanche competitive in the world of glittery AI companies popping up, luring capital away from venture capitalists?
Okay, first, so it all starts. Remember, I was taught to be a fundamental in my various places. It all starts with really operating excellence and fundamental development. So we've worked with great partners, and one area that people don't realize that is that there is actually a growing loyalty and royalty adoption on the Avalanche blockchain. I can't wait for this summer because the FIFA World Cup is going to happen. For instance, FIFA has put their royalty program on the Avalanche blockchain. We've worked with other brands and sports players like Cleveland Cavaliers, Detroit Pistons. What brands have realized now is that the blockchain with the good smart contract is actually a great CRM tool that allows you to directly engage with your customer. And that's led to a lot of incremental revenue. Cleveland Cavaliers have generated, millions of dollars of revenue because they're engaging with their fans better. And on the cost side, they don't have to reacquire, or FIFA or other brands don't have to reacquire their customers through search engine marketing or through feeds on Instagram or Facebook, et cetera, et cetera. So not only do they save money from sales and marketing, but they're also engaging with their fans and giving the fans a better experience and also generating incremental revenue. This is a perfect example of where stablecoins, blockchain being the truth source, is able to help companies accentuate their businesses. So that's a perfect example of stuff that I'm very excited about and that you're seeing that people don't realize is already happening.
I'll give you one example then you. So Elon Musk recently announced that Tesla will discontinue the production of Model X and Model S cars for Tesla. And so he's shifting and pivoting into robotics and AI. The Fremont factory that previously produced these cars will now be used instead to expand the production of Optimus robots. In this pivot towards AI and robotics that not just Tesla is experiencing, but I think is a broad industry shift, how are you trying to align with this pivot?
Yeah. Okay. So first of all, just comment on Elon. He's obviously one of a kind, incredible. Okay. He's one that can actually sell a dream and get away with it and have $1 trillion market cap on Tesla. No one else can do that. Other people, going back to my earlier statement, you have to actually prove it, and with the track record by producing something, at least in the long run. Not maybe in the short run, you can sell a dream, but at some point you got to sell the numbers. Elon can do whatever he wants.
Sure.
Okay, so how is crypto and how is Avalanche? Well, we are actually, one of the areas that I'm very excited about for all of crypto is once people in crypto, developers, realize that this is really a horizontal space, not necessarily a vertical space. Parts, great features, great things like stablecoins or whatever can be used to solve problems in other areas of tech. Then that's going to lead to people realizing that, and I think this is one of the most exciting parts of blockchain and crypto, is that besides stablecoins, blockchain and crypto can actually solve some of the biggest problems that are going to arise from AI. Recently we've had this fantastic, I don't even know what's called now, Clawbot, Mulbot, whatever, all of a sudden social media, people talking, bots talking to each other, creating their own bot Reddit, et cetera, et cetera. Like in that world where agents are running rampant, okay, you need a few things. You need to verify the true source, who the provenance of the blockchain can really help with that. You can identify who the real creator is, see the history of it moving from one AI, agent to another. That could be on the blockchain. That truth source is still nothing better underlying data ledger than it would be on the blockchain. Also, stablecoins. We talk about one day where we're going to have agents pay for you because you want to go on vacation and somehow your agent just goes and pays for whatever, through someone else's, agent. That's only possible if it's all internet-based, digital-based, and stablecoins will do that for you to make that possible. So we are talking and working with developers and companies that are still early on that journey, but they're trying to solve those types of problems.
Yeah. Okay. Perfect. So the future of Avalanche, then, how will it evolve? The use cases and adoption. How do you think that's going to change in the next 10 years?
So you're going to have more. So we're going to, right now, all of crypto, including Avalanche, has been very heavy on engineering and less on, call it product UI, UX, and bespoke solutions for certain verticals. So the people in Ava Labs and Avalanche over time are going to be more and more vertical expertise type of people who know specific areas of certain industries. When I talked about loyalty and royalty, part of the reason why we're able to get deals there, and gaming as well, part of the reason why we're able to get deals there is because we hire people from those industries who can get us into the room to discuss the benefits of an Avalanche L1 to help their business. You're going to see that at Avalanche probably faster than other places. Even the developers that we are hiring. First of all, AI has already changed our game in terms of development. I've seen, our engineering team, do things twice as fast than they could have done in the past. Now, the underlying core product, you still need that unbelievable Avalanche, PhD student from Cornell to still work on it. But from a testing perspective, from aggregating data to do research, to write documentation of how you do APIs and this and that, the AI agent has just been tremendous in helping the engineering team. On the marketing side, we used to, if we want to create logos for things, we used to outsource things to agencies 5-6 years ago. We wait weeks for different things to come back, and then I would go choose which logo looks good. Today, we have a summer intern who's in marketing that just instantly creates it, and then I go back and check it out. So we've already adopted from a internal use perspective, but going forward, we're also working with other great teams trying to help us create solutions for other industries.
Perfect. Final question. Are we ever going to see us, well, let's put it another way. What is the use case for institutional investors to hold cryptos, altcoins, besides outside of Bitcoin? There are other ETFs for things like Ethereum, Solana. Why should an institutional investor look into holding one of those, for example?
There is an ETF for Avalanche, just to be clear.
Yeah.
It was, I think, late January, and there are other ones on the way. I mean, basically, it goes back to what I said before, like which ones will win, and institutional investors and retail investors need to say which ones are creating real world use. And if they do that, they should be invested in the space.
All right, great, John. Thanks a lot. And where can we follow you and your work and stay up to date with Ava Labs?
Well, thanks. It's a pleasure to be here. So avalabs.org, if you want to look up the latest that's happening on Ava Labs and Avalanche. And for me, my Twitter, or my X, if you will, at John, JOHN, the number 1WU.
Okay. We'll put the links down below, so make sure to follow John and Ava Labs there. Appreciate it once more. John, we'll speak again soon. Take care for now.
Take care.
Thank you for watching. Don't forget to like and subscribe.